What's good, peoples? All right, man. So look, oops. So I'm finna run y'all through this breakout strategy because I'm in the process of learning a new one, but I made a little bit of money with the breakout strategy that I was using before, but August PAs were horrible, so I didn't. I wanted to learn more of the, what do you call it? The more database, like taking more database trades rather than just pattern trades. You know what I'm saying? So let's get rid of that real quick. So, I mean, for the most part, the people that are in here kind of know the deal. But I'm just gonna give y'all a quick overview just in case you didn't know. Right. So there's three types of markets. You have a bullish trend, right? Which just basically means the market is doing nothing but going upwards. You have a bearish trend, which means the market is doing nothing but the opposite and going down. And then you got a consolidation, which is the market isn't going up, it's not going down, it's just going sideways and it's in a range, right? Whatever. So when taking a breakout trade in the morning at 8:30, right? We want to be looking at two things, or two time frames actually. You want to be looking at, if I can put a text up here, the 5-minute and the 15-minute, right? And the reason you want to look at these is because if you use the 1-minute, I mean, you'll still get I think you'll get a little bit more sniper like entries, but when you're sitting on the 1-minute chart, the candles do nothing but this. So the 5-minute kind of lets you breathe a little bit and, doesn't make you go crazy, which is why I ended up getting off the 1-minute a lot quicker than I thought I was. So use with this strategy the 5-minute and the 15-minute. I would prioritize the 5 just so you can get entries. So what you're looking for, and I'm going to show you this on this morning's trades just so you can see. But in the morning, a lot of the times the market will be in a little consolidation phase before market opens. And you would like to see, a clear market structure. Sometimes, for instance, when we're at all-time highs, you can't really trade those markets because there's no levels to go off of, no breakout zones to really look off of. But the cool thing is, if you're in a trending market, you don't necessarily, I would never look for if we're near all-time highs or a trending market that doesn't have any levels to the side that are clear, I would say you put the breakout zone above the most recent structure point, just like this. And the same thing goes as bearish. If you would want to put that zone at that previous structure point right before it broke out, right? So what you're looking for, and if y'all are really watching this, put this in y'all's journals, right? Y'all are looking for a breakout, yes. But sometimes what it'll do is break out and then come back, retest, and then break again. So if you want to look for more precise entries, wait for that retest. But a lot of the times with the breakout strategy, it'll just run without you. So I would say, which is why I had a 2 trade limit. Take that first trade, and you remember, risk right and risk proper, because if you don't, then chances are you're going to blow your account, or you're going to be mad at a trade that you shouldn't have really been mad at. So enter that first position after you kind of see some volume. And when I mean volume, I don't mean little tick, tick, tick. I mean, if it's aggressively pushing, get in. But if you want to be safe, wait for a little retracement into that next, push. So when you're looking to enter breakouts, the one thing you want to look for is volume, or I guess you could say the breakout, which happens either when we break above or below our breakout zone, right? And the boxes don't have to be a certain width, length. You just want to see where price is most likely to break out of. So the boxes don't really matter how big or small they are, but don't make them too big to the point like you have, your structure point like this. Don't do that. Make them small enough to where, if they break out, you're going to catch pretty much the full move. So number 1 is breakout. Number 2 is volume. So how aggressive does it push out? Oop, I can't spell. Because a lot of the times, like I told you, if it's aggressive straight off the jump, it will either A, fake you out, or it'll be aggressive, retrace, and then go, or it'll just keep going. So look for that volume, because in the entry, if it's doing this and it's just kind of going and playing and going and playing and going and playing, you kind of don't want to enter until you see that volume kick in, right? That's number 2. And then number 3, like I just mentioned earlier, is the retest. So the retest is, like I told y'all before, if market is aggressively going, you want to see a little retracement before you enter, because you don't want to get faked out. Now, I'm not saying fake outs are avoidable, but you can definitely avoid a little bit more than if you are trying to play aggressive. So I would say look for that retest if you're trying to play it safe, right? So the strategy is not hard. It's probably the most simple strategy you'll ever get. Just because it's retail and it's just simple. And this is what I was using for a bit. Now, am I going to be using this strategy much longer? No. But I don't want to tell y'all false information with a strategy that I'm learning, and then y'all try to go apply it, and then y'all lose a bunch of money. You know what I'm saying? So I'm going to hold off on the strategy that I'm learning until I understand it fully. So we're going to go to today's trade. I didn't trade today because, as y'all know, I'm waiting on my payout, and I blew my account intentionally. Yeah, that's the right word. So 8 o'clock. So we'll do this. Put it this way. Okay, so that's 8:30. So structure is, as we see, it's not really trending sideways. It's kind of a little bit in a downtrend, right? And I'm not saying you have to do this, but this helps you kind of identify which way the market's going. I would say keep everything tight. So when I'm telling you these entries, this is where the support and resistance are. I wouldn't put this one just because, actually, no, there's a lot of touches on there. So let's just say we put them here. If you wanted to play it safe, and mind you, how the PA's been looking for August, I probably would have put my zone up here. But if price, closes above, we take the entry. If price closes below, we don't take or we take a sale, right? So as you can see, it ended up pushing all the way up. Now it's kind of hard to tell y'all exact entry, just because it's the candles aren't moving in themselves. But that's why I have um YouTube, so I can, y'all see most of the trades that I take. Now, with the strategy I'm about to learn, and this is just going off topic a little bit, but we would have tried to catch this reversal right here. But we would have entered, I would say, roughly around here with a 20-point stop and a 40-point take profit. Would it have gotten hit? Let's see. Yeah, so we would have hit a 1 to 2 today, and honestly, we would have got, what I'm risking, 400 today. So this is literally the strategy. Same thing as if we was going to the downside, we would go roughly right here, go with a 20-point stop loss, 40-point take profit. As you see, we would have had that little retracement, but would have ended up banging out after. So I'm gonna wrap this video up, but that's kind of the overview of the strategy, and hopefully y'all could take this and learn if y'all want to use the breakout, which honestly isn't a bad strategy. Just kind of August scared me a little bit, and I don't want to take chances on losing big amounts of money, which is kind of what I was doing in August. So use at your own risk, and when I end up understanding my other strategy a little bit better, I will end up sharing that with y'all too. So peace, motherfuckers.